Warren Buffett's Berkshire Hathaway Company recently bought more shares in Liberty Sirius XM Group on April 12, 2024. They now own 69,044,244 shares, a big chunk of the company. This video will crack the code on his decision and give you valuable tips for your investment game. And a special pro tip is waiting for those who watch until the end. But before we get started, is your business stuck in neutral? Hitting a sales wall can be frustrating, but don't worry, there's a free way to shift gears and revive your engine. Put your stuff out there for the world to see for free by signing up for a Workady account and watching your sales skyrocket. Workady is your chance to declutter, make some extra cash, and maybe even discover a hidden passion for online selling. So, now, let's get back to Buffett's Sirius XM company. How did Liberty Sirius XM start? Well, during the 90s, the world of satellite radio wasn't always harmonious. In fact, it began with two fierce competitors vying for dominance in the 1990s, Sirius Satellite Radio and XM Satellite Radio. Sirius, founded by Martine Rothblatt, was the first mover, securing crucial FCC licenses in 1990. XM, established a few years later, followed suit. Both companies launched their respective satellite radio services in 2000, offering a wider variety of commercial-free music, news, and sports programming than traditional terrestrial radio. Despite their initial success, both Sirius and XM faced challenges. The high cost of satellite radio subscriptions and limited receiver availability hampered widespread adoption. Recognizing the limitations of a divided market, the two companies joined forces in a historic merger in 2008, creating Sirius XM Holdings, Inc., a public company. This merger eliminated redundancy, allowing for a more comprehensive channel selection, improved technology, and a more cost-effective consumer service. In 2013, Sirius XM Holdings Inc. was incorporated, and by 2020 it underwent a restructuring. Today, it operates as a subsidiary under the Liberty Sirius XM Group, total employees 6,400. This group offers a subscription-based satellite radio service through Sirius XM, transmitting music, sports, entertainment, and more across various channels. The Liberty Sirius XM Group also has holdings in Formula One and the Braves Group, showcasing its broader reach in the entertainment industry. The company distributes its satellite radios and services through automakers, rental car companies, retail locations, and websites, with a presence in the US and the UK. Sirius XM has been in the spotlight lately, but not for the best reasons. Many folks have doubted the company's future, leading to many people betting against its stock. In fact, a whopping 27% of SIRI shares are being shorted, which is a big deal considering it's a multi-billion-dollar company. The main reason for this betting against the company's stock is that traders are trying to profit from the price changes expected from Sirius XM's upcoming merger with the Liberty Sirius XM Group, LSXMA, which already owns most of Sirius XM. This kind of trading has recently made Sirius XM stock prices unpredictable, causing a bit of a roller coaster for its investors. Surprisingly, Berkshire Hathaway, a company famous for being super careful with their investments, just bought a chunk of Sirius XM stock, SIRI, for a cool $167 million. This might seem strange, considering all the negativity surrounding SIRI lately. But here's the thing. Berkshire Hathaway already owned some SIRI shares. They also had a big investment in LSXMK, the other company involved in the Sirius XM merger. Maybe the news about the merger made them decide to buy more SIRI to have a say in how things go, or perhaps it helped them save money on taxes. Warren Buffett has been aggressively investing in Liberty Sirius XM, recently reaching a total spend of $465.4 million. This substantial purchase has secured him roughly 30% of the company's outstanding shares, indicating a strong belief in its future potential. On the greener side, Liberty Sirius XM, LSXMA, seems to be firing on all cylinders. They recently released their first quarter results for 2024, and things are looking good. The company's revenue held steady compared to last year, which is a positive sign in today's economic climate. Advertising revenue even showed some growth at 7%. Overall, their profit and cash flow remained healthy. The company's performance aligns with what they projected for the year, which shows they're on track with their plans. Liberty Sirius XM stands on rock-solid financial ground, with a formidable $3.9 billion cash and liquid assets. This financial prowess enabled the company to strategically refinance over $2 billion in debts due in 2027, clearly indicating its forward-thinking and fiscal responsibility. In the first few months of this year, they brought in $2.16 billion, just a bit more than what they earned last year. The cool part? The money they made from ads jumped by 7%, which is good news. After sorting out some numbers, they ended up with $265 million in profit, and even better, they had $650 million that they could use to make the business better or save for later. However, their free cash flow, which is the cash they have left after covering all their costs and paying for new stuff to improve the business, dropped a bit. But don't worry, it's all part of their plan to keep growing and improving. Liberty Sirius XM is not just surviving, it's thriving to fortify its leadership position in the industry. The company's strategic investment, financial management, and commitment to innovation are not just promising, they're delivering tangible results. Shareholders have every reason to look forward to what lies ahead as Liberty Sirius XM confidently marches toward a future filled with growth, innovation, and enhanced value. Currently, LSXMA is trading with a share price of an average of $25. Looking at future projections, two Wall Street analysts recently issued 12-month price targets for Liberty Media Liberty Sirius XM, LSXMA. Interestingly, both analysts predicted the same target price, $36. This represents a potential increase of 41.18% from the stock's current price of $25.50. So, what are Warren Buffett's tactics for choosing a value stock? Wait a minute. Are you considering starting your own business and making your dreams come true with new investments? Workerty is here to help you out for free. Workerty is like a giant online market where you can advertise your business without fees. This means you can tell everyone about your fantastic new company without spending a dime. But Workerty isn't just for selling things. You can also find amazing deals on bulk products from all over the world. This is perfect if you're a business owner looking to save money on supplies. On top of everything else, Workerty even gives businesses free listings in their directory. This means more people can find you and your business. So, if you're looking to save money and grow your business, Workerty is a great place to start. It's free and easy to use. Sign up. Back to Buffett tactics of choosing a value stock. You see, when you buy a stock, your price significantly affects how much you can make. Warren Buffett likes to pick great companies and decide when to buy based on the price. The aim is to get a fantastic business at a price that makes sense. Buffett compares a stock to a benchmark to determine if it is priced right. Let's keep it simple with an example. Imagine there are two stocks. One is priced at $700 per share and the other at $2. You might think the $700 stock is super pricey. But here's the twist. According to Buffett's method, $700 in stock could be a good deal if it's a solid business with strong growth potential. On the other hand, that $2 stock might seem like a steal, but Buffett would caution that it could become too expensive in the long run if the business behind it isn't strong or doesn't have good growth prospects. So, it's all about finding that perfect balance between a fantastic company and a price that makes sense for the value you're getting. Buffett uses different ways to determine if a stock's price is fair. Let's take a look at three methods with a simple example. 1. Earnings yield. Buffett looks at a company's earnings per share like the profits he gets from his investment. By calculating the earnings yield, earnings per share divided by share price, he can quickly see how it compares to other choices. Imagine you have a stock where each share earns $2. If you paid $20 per share, the earnings yield would be 10%, $2 divided by $20. You can calculate the earnings yield of any company and compare before investing. 2. Historical earnings growth. Another method Buffett uses is to look at how a company's earnings per share has grown in the past. A company's earnings per share grew by 10% annually over the past 3 years. If the current earnings per share is $4, you can predict future earnings by applying the 10% growth rate. Let's say the estimated future earnings per share is now $5. Now, if the price-earnings ratio for the company is 8, you could anticipate the stock price to be approximately $40, $5 times 8. 3. Sustainable growth. This method calculates how much a company will likely grow based on its return on equity and retention ratio. Suppose a company has a return on equity of 8% and keeps 60% of its earnings. By calculating the sustainable growth rate using these numbers, you'd get 3.2%, 8% times 1 minus 0.6. This rate is handy in estimating the future book value per share and earnings potential for the company. By using these approaches, Buffett aims to find solid companies at reasonable prices to potentially grow his investments over time. If investing isn't your cup of tea, or you want to make extra money without much effort, ever thought about turning that passion into some cash on the side? Workerty can help. It's a free online platform where you can advertise your skills or find your first paying gig. Whether you want clients nearby or worldwide, Workity connects you with opportunities without hidden fees. Sign up today and start earning. Now, imagine waking up every day with the freedom to chase your dreams, explore the world, and care for those you love, all without financial worry. Sounds pretty sweet, right? Financial freedom is not just a good thing. It's an incredible achievement that can bring you endless opportunities and a secure future. But it's not something that happens overnight. Just like the Roman Empire wasn't built in a single day, creating wealth and making intelligent investments takes time and careful consideration. Following the teachings of Benjamin Graham, the father of value investing and the teacher of Buffett, Buffett focuses on buying stocks in companies built to last, not just trendy fads. He likes to ensure the stock price is lower than the company's actual value so there's a cushion if things go south. Everyone watches what Buffett buys because his choices are usually pretty smart. He's a big fan of tech companies and big banks. He owns many stocks, including Apple, American Express, and Bank of America. And for those who have been watching this video till the end, here's a pro tip for you. Invest in undervalued stocks. These hidden gems can be pretty intriguing because they give patient investors like yourself a chance to sit tight and watch as the market catches on to their true worth. By holding on to these undervalued stocks over time, you could be setting yourself up to benefit from their potential price surge when the market eventually corrects itself. Remember, when investing in stocks, learn about the companies you're considering, just like a wise ruler plans their next move. Financial freedom is your ultimate victory, and building wealth requires thoughtful strategy, not just jumping on every bandwagon. Do your research, think long-term, and who knows, you may be the next investment whiz, building your own financial empire. Subscribe, like, share, and watch the next video.